Good afternoon, everyone. Namaskar. On behalf of ICSI, I welcome you all in today's webinar. So it is a part of the Master Knowledge webinar series of Triple E, that is Enable, Evaluate, and Excel. So it is the fifth webinar of this series, and today's topic is a very relevant topic, that is Managerial Remuneration and KMP, Key Managerial Personnel. And this topic, because we all are company secretaries are attending this webinar, so this topic is very relevant for all the company secretaries, whether they are into job or they are into practice. And even company secretary who are in job, they themselves are covering under the definition of KMP. So it gives me immense pleasure to invite CS Devendra Deshpande, who will deliberate on this topic. Devendra Deshpande ji is former president of ICSI and presently the director of board of ICSI International ADR Center, and he is chairman of ESG and Sustainability Board of ICSI. He is an expert of Companies Act and a senior practicing company secretary from Pune. So, sir, without wasting so much of time, I directly invite you. And sir, it is our honor and privilege that you are with us today in this webinar. So now the dice is yours, and please go ahead, sir. Please start the webinar. Sir, you are on mute, please. Yes.
Yeah. Thank you, Suresh, for that introduction, and I'm really happy to be part of this webinar series. I, as a Central Council member, used to have this moderation of such programs, and today I'm privileged to be a part of such webinar addressing the members. So it's my privilege to give something back to the institute, and now what we have is the time and knowledge which we have gathered through the experience throughout the practice. So thank you very much for inviting me here. I must also thank President and Vice President for giving me this opportunity to talk something about managerial remuneration and KMP. As Suresh ji rightly said, that it is one of the most pertinent topic when it comes to company secretary. One, because he himself is a key managerial personnel, and he must know that what are the provisions which are applicable to key managerial personnel, and how we as company secretaries should project ourselves as key managerial personnel. As well as the second most important point is managerial remuneration. So there are around 6-7 topics in the Companies Act which are of very much relevance. One may be CSR, one may be related party transaction, one may be audit and financial statements, and managerial remuneration, because the promoters are very much interested in knowing what is the managerial remuneration, what is the minimum which we can pay, what is the maximum which we can pay. Earlier, there was a requirement of central government approval. Now, what is the current situation? All those things are required to be understood by our members. Even the secretarial auditor has to report that whether these compliances have been done. And also, in certain cases, we need to have a certificate from a practicing company secretary that the company has not defaulted in any of the creditors or deposit holders or debenture holders. So a lot of scope for company secretaries when we talk about managerial remuneration. Nowadays, even proxy firms are very keen on understanding that what is the maximum limit of managerial remuneration and what company is paying, whether they are paying extraordinary remuneration or whether it is within limit, whether the managerial personnel to whom this remuneration is paid is qualified enough, whether so many angles are there. And now you must be aware that SEBI has come out with very strict norms in respect of appointment of directors. There cannot be a permanent director for managing director, and all we know that there is a 5-year term. So every 5 years we'll have to take the approval of shareholders, and there are so many other provisions which are applicable. So today, what we are going to discuss is various provisions, and alongside that, we will also discuss few of the practical tips alongside that. So I think this is a very pertinent topic, and this will be helpful. Whatever your questions are, you can put it in the chat box, and we will discuss at the end, because as per the structure which we have decided. So Suresh ji would be asking all
Yes,
those
sir.
questions at the
I
end.
think we will take all the questions at the end of the program. Or if you want to segregate this into two parts, first is managerial remuneration, then we should take the question, and then we can go on the second part, that is KMP. That it is up to you, sir. You are
Yes, yes.
on the lead. You're leading the program,
I'm
so we'll
fine
go
with
as per
that.
your convenience.
Yes, yes. I'm fine with that because see, I know that the live questions keep on coming. So if it is difficult to segregate on the live session, we can discuss it at the end also. So after managerial remuneration, we'll have a short break. I'll ask you whether the questions are segregated and we'll discuss those questions and then we will move ahead. So first point, I think Deepaji, if you can share the presentation which I have shared with you. Yes. So in managerial remuneration, all the stakeholders of a company is interested. May it be shareholders, because they should be aware that how much the promoters are taking away as part of managerial remuneration, because dividend is distributed equally. So they may not be, it may not be that relevant, but for managerial remuneration, it is not an equal remuneration which is paid to all. So many of the time shareholders are interested in knowing that how much they are getting paid and whether it is according to the industrial standards, whether it is according to the standard of that particular company. So if one person is getting X, whether another person is getting X divided by 10 at the same level. So whether there is a siphoning of the funds through managerial remuneration, and so many tricky situations are there. And basically understand that managerial remuneration, all the limits, whatever we are going to are applicable for that particular year itself. So it is not based on the historical data. So it is a very, very important decision. It has got provision regarding refund. It has got provisions regarding waiver. So I think it is very delicate matter for a company secretary in employment to handle, because he will be dealing with managing director, and it is very difficult for him to inform the managing director that, okay, this is the limit of your managerial remuneration and you have withdrawn this much. So it is a tricky situation. So we need to understand the nitty-gritties of managerial remuneration and how we should have the process set. That also needs to be discussed. So can you go to the first slide? Yeah. So the basic question when we talk about managerial remuneration is what and how to pay. So first understand who are the managerial persons. As per Companies Act, the managerial persons are only three. One is managing director, manager, and whole-time director. So whenever we talk about managerial remuneration under Schedule 5, only these three people will be called as managerial persons, and other directors. In Schedule 5, other directors have been also defined in the explanation that we will discuss later when we talk about it. So whenever we are talking about remuneration, the first question will come in mind: what is remuneration and how to pay? So mechanism of payment. So first, let's discuss what is remuneration. So remuneration has been properly defined in the Companies Act. So section 2, subsection 76 definitely defines remuneration. It includes money, yeah, or its equivalent, or given or passed to a director. So now it is not only money, so it is not the cash consideration, but it may be any other equivalent which has been given or passed. So for example, in one particular company, if a director is supposed to pay some debt or pay some electricity bill, for example, and it has been paid by the company, even though if it is not part of the perquisite, and if it is paid by the company, it will be treated as a remuneration. It will be treated as part of their remuneration. So remuneration definition is to be bifurcated from the limits. So limits are different and remuneration definition is different. Whenever we talk about remuneration, it is all inclusive, all money given, all equivalent given or passed on. So any asset which has been passed on to the director without any consideration getting back, it will be treated as a remuneration paid to the director. unless there is any other transaction between the company and that particular director. So without any consideration, if you pass on any property to a director, it will form part of the remuneration. So definition is very, very clear. Remuneration has to be, need not be only in cash terms. It can be in cash or otherwise than cash. And it can be paid directly or indirectly. So this is the most important definition. Whatever you are paying to a director, it has to be properly calculated, and that will form part of remuneration. It also includes perquisites as per Income Tax Act. So perquisites have been defined in Income Tax Act, and a lot of things have been included in the perquisites. We'll not get into those details, but all perquisites will form part of remuneration if we consider it as a definition. So as per definition of remuneration, all perquisites as per Income Tax Act are part of remuneration. Only thing is, as per Schedule 5, there is a requirement that these perquisites like PF, annuity or superannuation fund contribution made by the company on behalf of the director, gratuity up to half month salary every year of completed tenure, and leave encashment. These perquisites are to be kept outside the limit. So there is a limit of remuneration, maybe 11%, 10%. That also we are going to discuss. So if that particular perquisite is paid, it will form part of remuneration, but it will not be forming part of the limit. So it has to be excluded from the limit. So if I am paying 115 rupees, out of which PF, annuity and superannuation is 15, while saying how much remuneration paid, I will say 115. But while calculating the limit of 197, it will be only 100. These perquisites, I'll keep it out of the limits on the remuneration. So this is a very, very important point, because remuneration has been defined like this, and few of the perquisites have been removed from the definition of remuneration or limit of remuneration. Next one is sitting fees, which is one of the most important concept. And there are a lot of questions on this, whether private limited companies can pay sitting fees, whether public limited companies can pay, whether listed companies can pay. The answer is yes, all these companies can pay sitting fees. As per the provisions of the Act, there are few limits, there are few conditions on sitting fees. While calculating remuneration, it will be called as remuneration, but it will be out of the limits specified under 197. So 10%, 11%, 1%, it will not cover sitting fees. So there is a bifurcation between definition and limits. So that needs to be understood by us when we talk about managerial remuneration. Next one is professional fees. As you are aware that if a director is working as in his professional capacity, for example, it's a hospital, and in which one director is a doctor. So he is working as a doctor and getting some professional fees from the company. Then his professional fees will not be considered in the limits of remuneration. Yeah. So we need to understand two concepts: contract of service and contract for service. Whenever we are talking about remuneration, it is contract of service and not contract for service. Contract for service is consultancy or professional fees or anything else. So whenever we are talking about remuneration, it has to be contract of service. So whenever a director is employed, engaged, appointed in a company, he will be paid remuneration by different means, maybe by cash, by otherwise than cash, by passing on few of the properties, by directly or indirectly making the payment. All these things, including perquisite, sitting fees and professional fees, all will be called as remuneration. But while calculating limits under section 197, all perquisites which are specifically mentioned, sitting fees and professional fees, will be out of the purview. So this needs to be understood very clearly. Once this is clear,
sir, can we call this professional fees as place of profit other than directorship?
Yeah.
So will it cover under that head?
Yes, absolutely. Because the thing is, So that we will discuss later, because office of place of profit is specifically defined in 188, which says that if a director is getting over and above his remuneration. So while fixing the, so whether professional fees are remunerations, the answer is yes. So you can fix a remuneration of a director saying that he will be paid professional fees of 100 rupees. He will be getting salary of 2000 rupees and he will be getting perquisites of worth of 3000 rupees. Entire amount is his remuneration. If this is the resolution which you have passed, then there will not be an office of place of profit. Because in case of director, office or place of profit is anything which he is getting over and above the remuneration. So if you fix the remuneration X, which includes all these concepts, money equivalent, perquisite, sitting fees, professional fees, if you fix that, then there will not be office or place of profit. If you just say that his remuneration is 5,000 rupees and over and above he is getting professional fees, then it will be treated as office or place of profit. So there is a thin line difference. We'll discuss it in detail when we talk about section 188, which I have covered in my presentation later. Yeah. So first we need to understand what is remuneration by definition and what are the limits on the remuneration. Whether there is a lag or something, or am I audible properly?
No, sir, you are audible. There is no problem.
No problem. Yeah. Thank you. So this is the first part. Second part is how to pay. So now first question is clear, what to pay. So these things you can pay to the director and it will be treated as remuneration. How to pay? You can pay monthly, you can pay as percentage of profit, or partly as monthly, partly as percentage of profit. You can make the provision in this year, make the payment next year, no problem. Yeah. So you will have to have this clear understanding that remuneration need not be a monthly payment. It can be monthly, partly, monthly percentage of profit, partly, which can be distributed on quarterly basis, half yearly basis, or yearly basis. It may be paid monthly. It can be provisioned monthly, but paid at the end. So all permutation combinations are possible. So for considering a remuneration, any amount which is paid as remuneration, it need not be a monthly payment. So monthly payment will not decide whether it is a remuneration or not. Any amount which has been paid, maybe at the end of the year, can also be treated as remuneration because it can be treated as percentage of profits. And the provision can be made on monthly basis. Payment can be made at the end of the year. That is also possible. So I think payment is nothing to do with the determination whether it is remuneration or not. So how to pay can be answered as monthly or as a percentage of profit or by part ways. So it can be partly monthly, partly as percentage. Any permutation combination is possible when it comes to payment of managerial remuneration. So this is all about what and how to pay. We'll discuss about professional fees later on, or I can just add this. Whenever you are saying professional fees, there are two important conditions that the person to whom you are making the payment of professional fees should possess a qualification. Yeah, and that he should have a professional qualification like company secretary, doctor, architect, or whatever it may be. For example, we have been discussing this one particular example throughout our student age or even during our various meetings, that Sachin Tendulkar, he does not possess a qualification, but can he be treated as a professional who is there for coaching the cricketers? If the company is involved in coaching the cricketers, can he be treated as professionals? So the two things are, he should have the qualification and board and or NRC as the case may be. If NRC is not applicable, then board. If NRC, then NRC. NRC should be giving a consent that this amount has been paid to this person as a professional fee. So NRC or board should be comfortable while determining this payment as professional fee. Then only this fee will be treated as professional fee, and it will be out of the limits of remuneration. Yeah. So I think this is all about what and how to pay. We'll go to the next slide. Yes. Who can get the remuneration? Now, as I said, that managerial remuneration, initially, even in Companies Act 1956, we always talked about remuneration to be paid to managing director, whole-time director, and manager. Yeah. Normally, even Schedule 5 starts with these three words. Later on, it has been added that other directors also can get remuneration in case of inadequacy of profits or losses, as the case may be. So we can refer it to Schedule 5. In Schedule 5, there is one tricky situation, which is in the last explanation given in the part 2, which says that for the purpose of Schedule 2, other director means non-executive director and independent director. So now the question is, for managing director, we have section. For whole-time director, we have section. For manager, we have section in Schedule 5. For non-executive and independent directors, we do have section in Schedule 5. There is no problem. What about executive director? So executive director in case of public limited or listed company, and where there is an inadequacy or losses, then if you read Schedule 5 standalone, or if you read it along with the section, you will find that it is very, very difficult to pay remuneration to executive directors who are not whole-time managing or managing directors, to pay remuneration of even a single rupee to an executive director. So this is a problem of say maybe a drafting, or something might have been missed out. I think recently your institute has given some representation to the ministry also. It was informed to me that such representation has been made. But this particular point has been missing somewhere, that if there is an executive director and there is an inadequacy or losses in the company, then Schedule 5 may not be made applicable. So Schedule 5, you cannot take benefit of it. So it is very, very tricky situation, which we will have to handle sometimes in case of public company and listed company. Independent director, yes, you can make payment to independent directors. As per LODR, you cannot have ESOPs given to the independent director. Otherwise, sitting fees, reimbursement of expenses, all these things are possible in case of independent directors. KMPs, yes, other than the KMPs mentioned above, CFO, CS, and CEO, they can get remuneration at any level. There is no bar, there is no specific mention about a limit on their remuneration, because whenever we talk about remuneration to or managerial remuneration, even section 196 or 197 or Schedule 5, it talks about directors and managerial persons. So manager will be covered in managerial person, but CEO, CFO, and CS will be out of the limits given in section 197 or even 196 or even Schedule 5. So all these people will be allowed to get the remuneration. Even executive director, in case of profits, definitely they can get that remuneration. But in case of losses or inadequacy of profits, we'll have to be very careful while making the payment to the executive directors. And because the section allows you to make the payment to executive directors even in case of losses, but Schedule 5 is not very clear about how to pay remuneration to executive director. So we'll have to be very, very careful. Otherwise, we'll have to take a shareholders approval for this, because as you are aware that whatever is not allowed earlier was required to be approved by the central government. Now that provision is gone, only in case of in one case that central government approval is required. In all other cases, central government approval has been removed from the system and it is being given to the shareholders by way of either special resolution or ordinary resolution. Yeah, so this is all about who can get the remuneration. Next slide, please. Yes. So now we will discuss about type of companies and how they can be paid managerial remuneration. So let me be very, very clear about it. Private limited companies, there is no requirement of 197 limits, no requirement of understanding Schedule 5, the Section 196 subsection 4, Section 196 subsection 5, all are exempt to private limited companies. Private limited companies are not required to follow that. Section 197 starts with every public limited company. So it is not applicable to private limited company at all. So Schedule 5, 197 limits, nothing is applicable to private limited companies. Private limited companies can decide their own way of making the payment of remuneration to managerial personnel and other directors. So there is no limit at all. The second question which always come in front of us is whether the approval of board is required for making the payment of remuneration to specific directors of a private limited. So the answer is there is no specific provision in the Companies Act which says that it has to be approved by the board. Second thing is you can take a post facto approval. In few of the extreme cases, I have seen one of the opinions wherein if the entire balance sheet is approved by the board, it is deemed that the managerial remuneration mentioned in the balance sheet is also approved by the board. So there are three types of views which are available. One is there has to be approval of the board for making the payment of remuneration to a director of a private limited company. Second, you can take a prior approval or it can be a post facto approval also. And third, which is the extreme one, which is a very aggressive interpretation, which says that if you are approving the financial statements in which the related party transactions list is also getting approved and in which you are mentioning that this director is getting this much remuneration, so that is getting approved. So your director remuneration is also approved. This is the extreme thought. I am of the view that the board should approve the remuneration payable in case of private limited company, so that whenever you need to find out whether it is office or place of profit, you should know what a director is entitled to. Because Section 188 is applicable to private limited companies equally. So I think that board should approve a limit, maybe in terms of percentage, maybe in terms of real amount. So that is also one question, whether the board approval should be in terms of percentages or whether it should be in terms of amount. I am of the view that whatever resolution you are passing, I think there has to be a minimum remuneration payable to the managing director or a manager or a whole-time director, so that you can find out whether your profits are inadequate or not. So that we will come to later point. So I think there has to be approval of directors in case of private limited companies also, so that you will be able to understand what a director is entitled to. And if he is getting anything over and above it, it will be place of profit. So it is very, very clear. We should follow this process of taking an approval of board. It can be post facto also. So at the end of the year, you can take that approval, or it can be prior also. Doing it the third way, which is a very aggressive one, but sometimes people are using that particular interpretation, and approval of financial statements is deemed to be approval of expenses made towards managerial remuneration. That is what few people are taking stand, but I don't agree with the third stand. But first and second stand, I completely agree, and we can go ahead with that. So these are the aspects. Then limit on remuneration. I think there is no limit, even if there is a loss of 1,000 crores, and if you want to make the payment of 5,000 crores to a director of a private limited company, there is no restriction. I know this is strange, but there is no restriction in making the payment to director of a private limited company because of exemptions, because of non-applicability of Schedule 5. Even though corporate governance, if you understand corporate governance, you will never pay extravagant remuneration. But sometimes remuneration has been used by private limited companies as a part of structuring of their payments or outflow from the company. So there is no limit. So it is very, very clear that there is no limit on remuneration payable to a managing director, manager, or whole-time director, or even a simple director of a private limited company. In case of public limited company, the situation is completely different. In case of listed company, there is one step ahead, which we need to understand. Yeah. So 196.45 as well as 197 Schedule 5, everything is applicable to public limited and listed company. Yeah. Without any threshold. So a normal public limited company having 7 shareholders, a closely held public limited company is subject to the limits specified in section 197. There is no threshold which has been given. There is a requirement of approval of NRC, approval of board, and approval of shareholders in case of public limited as well as listed company. This we will discuss in detail when we talk about those provisions. And there are a lot of limits on the remuneration. Now, many of the times, the main question which comes to any company secretary is what is inadequacy? We understand what are losses. Yeah. So losses is zero profit or less than zero profits. So negative profits are called as losses. So if there are losses, then what will happen? And second is inadequacy. So what is inadequacy? So as far as I understand, if a company has decided to pay 5,000 rupees to a director, and that is going beyond the specified limits of 5%, 10% or 11%, then it is treated as your profits are inadequate. I will repeat. I know this is a bit complicated thing. So inadequacy of profits is you have decided a amount to be paid to a director, managing director, for example. So you have decided that I will pay 5,000 rupees to a managing director, and my total profits is say 10,000 rupees. So I am paying 50% of my net profits to a managing director as remuneration. So I cannot go under section 197. I will have to go to Schedule 5 because my profits are inadequate to make the payment of 5,000. So normally in the resolution, the percentages are not given. It is the absolute amount which is given. So if the resolution says that managing director is entitled to get a remuneration of 5,000 rupees, and in that particular year, the profits have gone down to 10,000 rupees, then you are paying 50% of your profits to managing director. Then you will have to go to Schedule 5 and understand what is your effective capital. From effective capital, you find out that what is the amount which I can pay to that managing director, and follow the conditions which are specified in Schedule 5. Bit complicated.
So, sir, what you suggest, what we should mention in the resolution? Should we mention the exact amount or we should mention the percentage?
Yeah, it has to be a detailed resolution as far as I understand. It should have the minimum remuneration payable to a managing director and also the perquisites which he is entitled to. So it should give the complete details. You should not say percentage, because what happens, I will tell you. This remuneration will be calculated on the profits of this year itself. So in the first month, you will make the payment of X amount. In next month also X amount. Like this, you will keep on making payments. At the end of the year, you will understand, okay, my profits are not adequate. So you will end up in trouble at the end of the year. So you should be never talking in percentage terms. It should be always in the absolute term. So even in case of private limited company or public limited company, your resolution should be in the absolute number and not in percentage. Because at the end of the year, you will realize that, okay, my remuneration is not, whatever I have paid is not fitting in the 197, but fitting in Schedule 5. Then I can move it to Schedule 5. So I think it has to be in absolute term, and minimum remuneration should be mentioned in the resolution itself. So this is all about adequacy and inadequacy of profits. Only in that case, you can go to Schedule 5. So that's not a problem. So that is very, very clear. For listed companies, LODR specifically gives a different restriction. That also we are going to discuss later. 2.5% of the net profits or 5 crores, whichever is higher. So over and above that, you will require a special resolution. So whatever we are talking about, whenever we are talking about any limits, those limits can be enhanced by way of special resolution or ordinary resolution, as the case may be. So we need to understand that it is not like this is the limit, and without above that, we will not be able to pay. If shareholders approve, then you can make the payment over and above it. In addition to that, I would like to add one point here in respect of payment of remuneration to the directors of a specific class of companies, that is Section 8 companies. So a Section 8 company, if the director is also a member of that particular company, he will be allowed to have a reasonable remuneration and not above that. So a member is not allowed to get anything over and above reasonability in case of Section 8 company. So that is one more point which I wanted to add. So this is how a managerial remuneration of private, public or listed company is dealt with. Private companies, no limit at all. Passing of resolution, it is recommended. Better to do it prior. If not prior, then post facto. But there has to be a resolution so that you will be able to understand what he is entitled to. And in audits also, there is a requirement of an auditor giving a statement whether the amount paid by the company to the managerial personnel is within limits or not. So for all practical purposes, taking a board approval and noting of the remuneration of the directors is recommended. We don't need to go to Schedule 5 at all in case of private limited company. So private limited company, it is very, very clear. In case of public limited company, there are different limits. Those limits can be enhanced by special resolution. It has to be in monetary terms, the absolute number. Schedule 5, there are a lot of conditions which are required to be followed. If those conditions are followed, you can pay the remuneration according to the Schedule 5. Schedule 5 gives you the table. We'll discuss that when we talk about Schedule 5. Okay. Any questions so far, Suresh?
We have received many questions, sir. So I think
if you want, we can discuss that also.
Right? Yes. So let me ask first question. The first question is there any limit of managerial remuneration of loss-making unlisted public company for payment of its professional executive directors? So this is the first one.
Yeah. So if they are making the payment of professional fees as per Section 197, it is out of the limits of 197, so you can make the payment. If they are executive directors, not the professional fees, you are not making the professional fees payment. It is the normal executive director who is getting remuneration from the company. Then Schedule 5 is silent about it. Schedule 5 does not give a right to make the payment to that particular director. You can make the payment to executive director as a percentage of profit, and that percentage of profit can be increased by way of shareholders resolution.
Okay,
so in case of losses, it will be very, very difficult for a company to make payment to executive directors. They can make payment to independent directors, non-executive directors, MD, manager or managing director. But for executive directors, there is a technical hitch. There is a drafting issue, I think.
Okay. Okay. So I think you have already explained this topic. The second question is, what is the meaning of inadequate profit or adequacy of profit for the purpose of calculating managerial remuneration under Section 197? So you have already explained. If you want to say something over this.
In simple language, the profits are not adequate to pay the remuneration which is decided.
Okay.
That is inadequacy.
Okay, sir. So now we are moving ahead towards the third question is, will there be any issue or conflict if we appoint CFO as manager also? If we appoint CFO as manager also to Section 196 on interim basis?
See, what I believe is there is a restriction on manager to be appointed as managing director. But by section
CFO, yes.
CFO is not covered in that. Again, if we move to Section 203.
Yes.
And there are 3 key manager, whole-time key manager personnel which are required to be appointed.
Yes.
All those 3 should be different as far as my interpretation goes, because it says company shall have following key manager personnel. So there has to be three different individuals getting appointed as KMPs. So if it is covered under 203, you will not be able to appoint a manager who is a KMP as CFO as a KMP.
Okay, sir. Yes, you're correct. So the fourth question is, in case of inadequate profit, whether managerial remuneration can be paid more than prescribed under Schedule 5 of Section 2 of the Companies Act 2013, whether SR is required, whether special resolution is sufficient, should it be prior approval?
No, special resolution is sufficient, and special resolution can be taken even later. That's not a problem. You can take
post facto effect. We can
post facto approval is also possible because it doesn't say about prior approval. So shareholders approval can be obtained later on also. Till the time shareholders approval is not received, the director is supposed to hold that money in the trust.
Yes, correct.
So excess remuneration paid, he has to hold it in trust on behalf of the company.
Yes, sir. So, sir, shall we take some more questions?
Yeah, I'm fine with that.
So, in case the finance head of the company, who is also a director, gets remuneration, for example, the salary as an employee of the company, do we have to mention this salary, that the remuneration, in the form AOC2 as RPT?
Yes.
He is a finance head. Yes. He's a finance head, and yes, he's a finance head, and he's getting remuneration as director also. So, do we need to mention this in AOC2?
If he is a director, anyways, he is a related party. So, whatever payment you are making it to him, it will be.
We should mention it.
Yes.
It is advisable. Yes.
It has to be.
So next question is: there a private limited company which has voluntarily appointed CFO is required to follow the provisions for KMP under Companies Act?
Yeah, that's a very
most of the questions are related with the CFO.
Yeah. So this point definitely we'll discuss when we talk about the definition of KMP, because that is the only thing which I'm going to discuss today. So
you can give little hint over here if you want.
Yeah. So see, a person is appointed as a KMP by following the provisions of Section 179 subsection 3. That is, if you pass a board resolution and if you file the DR 12 for a CFO, he will become a CFO and he will be a key managerial personnel of the company. By that manner, he will also become an officer in default. But if a HR by a letter appoints a CFO without following a procedure under Companies Act, he will not be treated as KMP of the company.
Okay. So I think this is confusion of many professionals.
Yes.
So I think you have clarified it, and you will discuss this point in detail also.
In detail. Yes.
So, sir, now we are moving towards the next question. As per Section 35B, subsection 2 of Banking Regulation Act 1949, Section 198 of Companies Act 1956, equivalent to Section 197 of New Companies Act, is not applicable to a banking company. In view of this, whether Section 197 is applicable to a banking company?
No, for banking companies, the Banking Regulation Act will prevail, because Companies Act becomes a general act and the banking provision becomes a special act. Whenever there is a conflict between a general provision and a special provision, the special provision will always prevail. Okay,
precisely correct. I think. So next question is: Board of Directors has made an appointment of whole-time director subject to approval of shareholders. If shareholders disapprove the appointment, whether the concerned whole-time director is eligible for remuneration during the period of his appointment till the date of AGM or general meeting of the shareholder. If remuneration is already paid, whether he will be required to refund the same. Very good question, I suppose.
Yeah, I think if the shareholders doesn't approve, then the provision says that whatever acts he has done will remain valid, but whatever remuneration has been paid to him will be over and above the limit. So either he will have to refund it within 2 years, or within 2 years, the shareholder should pass a resolution of waiver of that refund.
Okay, sir.
Yeah.
So next question is under section 197. If company has two whole-time directors, the remuneration payable if more than one MD, it is 10% ceiling of net profit computed under section 198. So query is, what if company wants to pay one whole-time director at the rate 6% and other 4%? So the individual limit of 5% is not complied. However, the overall 10% ceiling is complied with. So we have advised the company to seek a special resolution as individual limit of 5% is benchmark. Is this stand correct, as the company is saying that they are complying with 10% overall limit?
No, absolutely correct. Your whatever stand you have taken is absolutely correct, because
I think 5% limit is the,
yes,
the
5%
basic
limit
criteria
is,
you have to follow.
so 1%, 5%, 10%, and 11%. All criteria should be fulfilled.
Yes.
If you are exceeding any one of them, then you should go for a special resolution in the general meeting.
Yes, sir. So next question, what shall be the sitting fees in case of non-executive directors of a private company?
It can be
I think
anything.
this is very
Whatever you
simple.
want to say, whatever you want to pay, you can make the payment of that.
There is no limit, yes.
There is no limit. For public limited companies and listed companies, as we all are aware, the limit is 1 lakh rupees, and the independent directors and women directors should not get less than the other directors. So this is one condition, additional condition, which has been mentioned in the rules.
Yes. So the next question is whether executive director and whole-time director are one and the same. I think this is
No, they are completely different. Whole-time director has been specifically defined as a
defined, yes.
full-time employment of the company, and executive director has not been defined, but executive director is a director who gets the remuneration from the company. So this is for salary from the company. He may not be in full-time employment. So
okay, sir.
So
I think this is very clear, sir.
Yeah,
very much clear.
Only one hitch in this is if one person is appointed, one person is already employed in a company. For example, Suresh is acting as a company secretary of a company, and now he is appointed as a director, whether he will become a whole-time director. That's a question which has been asked by many. Even though if we read the definition of whole-time director in Companies Act 2013, it stands similar to 1956. In 1978, Department of Company Affairs have given one clarification that whole-time director can be either by way of designation or by virtue of substantial powers of voting, substantial powers of management. So a company secretary who is appointed as director will not become a whole-time director unless he is designated like this or he gets the substantial powers of management. So there is a Department of Company Affairs, yes, circular
DCA,
which substantiate this.
Yes, and sir, the next question is a chairman and managing director of an unlisted company who has completed 70 years wants to be reappointed. He is unable to get a special resolution passed for want of require voting power. Can the company pass an ordinary resolution and with central government permission appoint him and pay remuneration?
Yes. There is a clear provision in the Schedule 5 that if you want to appoint a person who is above 70 years and if you propose a special resolution has failed. But while failing in that special resolution, you could gather more than 50%. So the votes cast in favor are more than votes against, then you can go to central government and obtain an approval from central government for his appointment. So there is a clear provision in Schedule 5 in this.
Yes, sir. Sir, one more question. If company has loss making and we are paying salary to whole-time director as per Schedule 5, so do we need to pass SR?
No, if you are following under Part A of Schedule 5, Part 1 into brackets A, then you will have to pass an ordinary resolution. If you are making a special professional fees payment, then it has to be a special resolution.
Sir, we have many questions, so I think we can take all those questions at the end of the program. I
No,
think
that's
that will
fine.
be better.
Suresh, I am enjoying this way also. That's not a problem for me.
Okay, okay.
Anyways, we can take it forward because otherwise we will.
Yes, if you want, we can go like this also. But I think we need to cover the second part also, so we can
Yes,
take all the questions which we have received at the
sure,
end of the program, sir. At the end
sure,
of this your technical session.
sure. So next
Okay,
slide.
sir. Yes.
Yeah, so we will just discuss detailed provisions in brief, so that whatever questions you have raised, that we can definitely find out the answers in these provisions. So appointment of managing director or manager or retained director can be only for the period of 5 years and at a time. So we can continue for 50 years also, but each term has to be for 5 years. That's not a problem. Why I'm saying 50 years, because at the start of his tenure, the age limit is 21 years to 75 years. So he can continue as a managing director, whole-time director, or manager for a period of 50 years also. So, but each term has to be 5 years. This is applicable to private limited, public limited, as well as listed. That is why I have mentioned PPL. So applicable to private limited, public limited, and listed also, because section 196 1, 2, 3 are applicable to all companies. There is a exemption only from section 4 and subsection 5 of section 196. So we are talking about detailed provisions of 196. So no manager and MD can be same at the same time. So no person can be appointed as managing director as well as manager at the same time, because managing director is the person who has got substantial powers of management, and manager has been defined as a person who will have whole or majority powers of management and who works under the directions of board of directors. So there is a difference between a manager and managing director. What I always used to while studying or while understanding, while I always used to say that a director who is also a manager will become a managing director. So a director having substantial powers will become a managing director. A person who is not a director but having substantial powers will become a manager, and he works under the directions of board of directors. So manager and managing director, there cannot be one person. So there has to be two different persons, as well as you cannot appoint manager as well as managing director at the same time. So both the provisions are equally important. Next one is the reappointment of any managerial personnel can be made within a period of 1 year. So if his tenure is completing on 31st March 2024, then you can pass the resolution 1 year before and not 2 years before or 3 years before. You can pass the resolution of board or general meeting in 2023 annual general meeting. So that is possible if his tenure is getting over on 31st March 2024. Next one is the age limit, which we have already discussed. From a director can be appointed at the age of 18. So after completion of 18, he can be a director. But for becoming a managing director, manager, or whole-time director, he has to be 21 years minimum, and maximum is 75 years. If he want to continue beyond 75 years, then special resolution is required. And if that special resolution is failed, and if the votes cast in favor are more than votes cast against, then the company can go for a central government approval, and central government will give approval based on the facts of the case, and it is applicable to private, public, as well as listed companies. So this is a very, very important provision and has to be understood clearly. Then MD, manager, or whole-time director to be appointed by board and in the next general meeting. So there is no requirement of prior approval of general meeting for appointment of a managing director, manager, or whole-time director. Board can appoint. Board has all the authority to appoint a managing director, manager, or whole-time director, and the general meeting will then post facto give an approval for his appointment. If it is not approved, then again he will be demitting the office. He will have to refund the entire money back because it is an excess remuneration which is paid. Or we can go for a waiver. That is a different ball game altogether. This is applicable only for public limited company and listed company. So this particular provision is not applicable for a private limited company because of 196(4) and 5 being exempted for a private limited company. Then MR1 has to be filed for the purpose of appointment of MD and managing director. Again, it is applicable only in case of managing director, manager, and whole-time director. Earlier for KMPs also MR1 was required. Now MR1 is not required for these people. Earlier there was a requirement of filing CG1. Nowadays there is no requirement of filing any CG1 if you file the MR3 late for any approval of central government. There is no requirement of filing a condonation of delay. So that CG1 per se has gone from the system. If you find out that nowadays you will not be able to file that CG1 form because of the technical issue, and most of the cases that particular condonation of delay has gone done away with, like section 117, where you used to file MJT 14. So after 300 days, you were required to take approval of central government for condonation of delay. Now that 300 days provision has been removed. So I think the central government approval is not required. So CG1 process itself has been moved out of the system. Even though there are a lot of requirements of getting the delay condoned, like CHG1 beyond 120 days and all. But as of now, there is no clear-cut provision in respect of that. So let's not discuss that. We'll come back to this MR1. It has to be filed only for public limited and listed company. If no approval is received, then all the acts done by that particular director will be treated as valid. So if a managing director signs, for example, he is appointed in the month of April, he signs the financial statements in June, and in September, his appointment gets defeated. Then whatever he has signed as a managing director, the financial statements, all the acts will be valid, and we cannot invalidate his acts when he acted in good faith. So that has been clearly mentioned in the section 196 subsection 5. So this is applicable to public limited and listed companies. Next, please. Yes. So this is one of the most important provision when it comes to managerial remuneration, because whenever we talk about net profits, it is not the net profits as per the balance sheet or the P&L. Many of the times we get a question that whether we should take profit before tax, whether we should take profit after tax, or what it should be. So my view is very, very clear. We should be thorough and we should be aware about what are the calculations under section 198. 198 allows you to deduct few expenses. 198 allows you to add a few expenses. It is the real profits from the business of the company, and that is section 198 net profits. Whenever we are talking about managerial remuneration or CSR, in both the cases, you will have to calculate provisions, net profits as per the provisions of section 198. So these are the real profits of the company, real business profits of the company. Any profits received by way of sale of assets will not be treated as part of that profit, has to be deducted. Any return back amount has to be removed. So you'll have to find out what is the real profit of the company out of the business conducted by them. So 198 calculation is very, very important. I would suggest that whenever you are dealing with managerial remuneration or CSR, it is better to have a certificate from your statutory auditors about the calculation of net profits. For CSR, earlier you will require a certificate for earlier 3 years, and for managerial remuneration, you will require the profits for this particular year in which you are making the payment. So it is not a historical one. You will not make any adjustment to the managerial remuneration while calculating 198 for managerial remuneration. Yeah. Then there is a limit of 11% for all directors taken together, 5% for each managing director. If there are more than one managing director, then total 10%, 5% each has to be followed, as well as total 10% has to be followed. 1% for other directors, that is maximum which you can pay. And you can also, in addition to this, you can make the payment by way of percentage of profits, that is one up to maximum 1% if there is a managing director, whole-time director or manager, up to 3% if these people are not present. All these limits can be increased by the shareholders' approval. So if shareholders approve any limit over and above this, if they approve that, okay, managerial remuneration can be 35%, total managerial remuneration, it can be 35%, no problem. And all these limits has to be considered individually as well as collectively. So this is a very, very important aspect when it comes to limits on the managerial remuneration. Before taking the shareholders' approval, you will have to take the approval of public financial institutions, secured creditors, before you go into the general meeting. So if you have secured loan from public financial institutions, if you have debentures which are issued to outsiders, if they are secured debentures, all those approvals have to be taken before the general meeting. Then you can go and pass the shareholders approval for the increased limit. Usually the shareholders will approve the amount which has been paid to the managerial personnel, and if it is beyond even schedule 5, so we will have to calculate this. So percentage will never be decided by the shareholders. Shareholders will give it in absolute numbers, and they will approve the remuneration already paid, and they will approve two ways. One is remuneration already paid and remuneration for next year. So that is how the shareholders will approve, and not in terms of percentages of profit. So it is very, very rare that shareholders will increase this limit of 11% to 15% or 20%. It will be an absolute number only. Next one is it has to be a special resolution passed for increasing this limit. Then in inadequacy of profits, we have discussed enough on this. What is inadequacy? What is adequacy of profits? So again, I will reiterate here that inadequacy of profits means profits are not sufficient to pay the remuneration which has been fixed. So if I decide 5,000 as my remuneration and 10,000 is my profit, then it is not fitting into 5% or 11%. So I will have to go for a inadequacy of profit and find out that what is my eligibility under schedule 5. So I'll then go to schedule 5, not before that. Sitting fees, we have already discussed that the maximum sitting fee for a public limited company or a listed company is 1 lakh rupees, and independent director and woman director cannot get less than others. So if managing director is getting say 50,000 rupees, even independent director or woman director should get at least that much. So that is what has been mentioned in the rules. So very, very important. Professional fees, we have already discussed that there has to be a professional qualification, and the board, or it is and, so not or. And board or NRC, as the case may be. If NRC is applicable, then NRC. If not applicable, then by board. They should be of the opinion that the amount which is being paid to this particular managerial personnel is a professional fee. Then only if these both the criteria are fulfilled, then only you will be able to tell this as professional fees. The professional fees and sitting fees are out of the limits of your total percentages which are calculated above. So they need to be excluded from this particular amount. Next one is excess remuneration paid. There can be a situation because it has to be paid in this year only, and at the end of the year we'll be able to understand what are my profits. And at that time, I would realize that, okay, I am not fitting into this 1, 5, 10, 11, 1, 3, whatever percentage it is. I will go to schedule 5. In schedule 5 also, if I find that, okay, I have crossed the amount which has been mentioned in schedule 5, I have two options. Yeah, first is I can go for a refund of that particular amount from the managing director, which is a very, very tricky situation for a company secretary to do. And second option is you put a resolution, a special resolution in shareholders meeting within a period of 2 years from the date it was refundable. Yeah. So for waiver, so you can go for a waiver of this additional remuneration paid. So this is the process for excess remuneration paid and waiver of additional excess remuneration paid till the time from the date of understanding that this is the excess remuneration till the time shareholders approval is received. For this particular period, the director is supposed to hold this amount in trust and on behalf of the company. So this is also very, very important, and we need to understand this. Yes, Suresh, any questions we want to take?
Yes, sir. Just a second, sir. Sir, the question is, please clarify if audit committee approval is required for payment of remuneration to a MD who is spouse of a nominee director. Company is listed, but not equity listed, but not high value debt listed.
So if it is a private limited company,
it is a debt listed company.
So as per the amendment to the rules dated 1st April 2021, debt listed company which is not a high value listed, it will not be treated as listed company for the purpose of Companies Act. So we'll have to consider whether it is a public or a private limited company. Relative of a nominee director will also be treated as a related party. So as it is a related party, the remuneration paid to him will be him or her will be required to be approved by audit committee.
Okay, sir.
If it is 1 crore, then even an omnibus approval is sufficient from audit committee.
Okay, sir. Sir, the next question is, if a listed company has net profit after tax of rupees 1 crore and the company wants to appoint managing director at the remuneration of rupees 40 lakhs per annum. In this situation, whether it will be treated as an inadequate profit or not?
Yeah, so you will go to, see, if you are appointing it right now, then you will have to consider the profits for this year and not for previous year.
Okay.
So that is what I'm trying to tell you, that in all other cases for related party transaction, you will consider previous year's revenue and net worth for finding out what percentage, 10% of revenue or 10% of net worth. But for managerial remuneration, you will consider the profits of this year. So in this year, if you are targeting that 1 crore is going to be your profits and you are deciding that his remuneration will be 40 lakhs, you will go to Schedule 5. First, you will directly pass a special resolution and you will appoint him with special resolution and mention of Schedule 5. That this will be his minimum remuneration, even if there is an inadequacy of profits. So 1 crore will be treated as inadequacy of profit and you can take shelter of Schedule 5. Only thing is conditions of Schedule 5 have to be followed.
Yes. The next question is, for payment of remuneration by way of commission to non-executive directors of listed company, whether we need to take approval from shareholders for a specific period, for example, 5 years or 3 years, as per the section 197 and 198 of the Companies Act, and as per regulation 17 of SEBI LODR, or yearly approval for payment of remuneration by the way of commission is sufficient for compliance of section 197 and SEBI LODR.
Yearly is fine. If yearly is not there, you can just decide that, okay, this is the non-executive director, because see, understand the non-executive director's term of appointment is unlimited so far. Other than independent director is 5 years, managing director is 5 years, executive director and non-executive director. These are the two people who don't have a term. Now, SEBI has come out with a requirement that every 5 years you need to take a shareholders approval. So now even for permanent directors. So I think you can decide that, okay, Mr. X, who is a non-executive director, he will be paid a commission of 1% for next 4 years. This resolution is absolutely fine. There is no problem. In LODR, there is one requirement that if one non-executive director is getting more than 50% of the remuneration of all non-executive directors. So all non-executive directors are getting 100 rupees, and one out of this 100 rupees, one person is getting 51 rupees. then annual approval is required.
Okay, sir. So next question is, if the resolution for appointment of director approved by board and defeated by shareholders in general meeting, whether directors required to, the same question, whether directors required to refund the remuneration.
Yes.
You have already answered this.
Yes.
In case of office or place of profit, director taking professional fees shall be under the limit of section 188, or if it is paid on arm length basis, can be exempt from the limit of section 188 if it is on arm length basis.
Yeah. So if we consider section 188, the first and foremost thing is, if it is in ordinary course of
business, yes.
Arm's length, if the transaction is the arm's length, then no approval is required at all.
Then it is exempted. Yes.
Then it is completely exempted. So you can take that shelter.
Yes. So the next question is, what is the applicability of Maternity Benefit Act on company secretaries employed as KMP in a listed company? Is it mandatory for a listed company to provide paid maternity leave for 26 weeks to its whole-time CS? If yes, is there any provision to protect the female CS in case she is not getting maternity leave from such listed entity? I think this question is not related with the topic.
No, this is more of a labor law related topic.
Yes.
It has to be dealt like that.
So next question is reimbursement of business expense incurred by director in the course of business. What will be its treatment? Reimbursement of business expenses.
Yeah.
I think it is simple reimbursement.
Yeah. So reimbursement of expenses will never be a part of the remuneration, not at all, because the amount, see, this amount has been spent by the director on behalf of the company. So company is booking it as an expense. If they're booking it as an expense, so travel expense, so it can be for an employee or a director. It will never be part of remuneration of managerial personnel.
The next question is very interesting, and many company secretaries are asking this question. Can a company secretary work as company secretary in one company and as independent director in another company?
Answer is absolutely yes. Only thing is, if it is a related entity, then the pecuniary relationship and all those criteria under section 149 subsection 6 will have to be checked, and then only he can be a...
But if it is not related company, then there is
no
problem as per you.
Definitely. Only thing is, one more rider to it, that the employment agreement of that particular company. So if I have appointed Suresh Pandey as company secretary, and if my employment agreement has got certain clauses and restrictions, that will be binding on me. But
yes, that depends on companies to company to company.
Yes. As per Companies Act, you are allowed to be an independent director of any other company. Plus, you can be a non-executive director of any other company. Plus, you can be an executive director of any other company.
Okay. If a MD is appointed for 2 years subject to CG approval with remuneration, the application with CG is duly filed, but MCA approval is not received within that period. No rejection communication is also received from CG. The situation continues and MD is paid remuneration. The term of 2 years is expiring. How to deal with this situation? I think this is more of a personal question.
No, it is very easy. I would like to answer this because this particular problem occurs with many, and if the application is not processed, the date on which the application gets rejected, from that date, that amount is refundable back to the company, and from that date, within 2 years, you can take a waiver approval of the shareholders.
Okay. So if there is pendency in application, then there is no question of refunding.
No question of refunding.
Okay. The next question is, can MD and CFO of a listed company be appointed without remuneration if they give their consent for non-receiving any remuneration?
It is always high, like the limit. Yes. It is a maximum limit. There is no minimum limit.
No minimum limit.
Yeah.
Correct. So it is allowed without payment. You can appoint any MD, and it happens in many companies also.
Yeah.
The next question is, can a publicly limited company having adequate profit give 100% profit to their directors as a salary? It is about, the question is for public limited company.
Yeah, if you
They
pay
want to give
100% of
100%.
net profits to a managing director, your profits are not adequate to have 11%. So you will have to go to Schedule 5. And the limits in Schedule 5 will be applicable. Those limits can be again increased by the shareholders approval.
So the next one is, if a remuneration for KMP is approved in board meeting in 2021 and in 2023 NRC committee is formed, can the revision of remuneration be approved directly in NRC instead of board meeting? And is it necessary to note the actual amount in the minutes, or only approval for revision in the remuneration can be approved?
See, we need to understand the role of NRC. NRC is a recommendatory committee. So it will recommend the policy, the way of increase in remuneration, the policy for increment. All these things will be recommended by the NRC to the board, and at the end, board will approve. So I don't think that NRC will be actually mentioning the numbers. They will be recommending a policy, the way we should increase or percentage maybe. But actual numbers, I don't think NRC will be recording.
So the part of question is, can NRC take it directly without board?
No. NRC, see, it is other way around.
NRC will take, yes.
First, it has
NRC
to be
will,
NRC, then board.
Yes, NRC will take it and decide it, and then it is forward. It will forward it to the board.
Right.
So the next question is very interesting. I don't know. Can we pay commission to independent directors? So where is the independence?
No, actually, earlier this provision was very, very clear that we cannot pay anything to the independent directors. But with the recent amendments in Schedule 5 as well as Section 197, we can make the payment of remuneration to independent directors also, subject to Schedule 5.
The limits, yes.
Schedule 5 and 197 limits. So commission can be paid.
Commission can be paid. So the next point is, CEO of public company is also a director and KMP. He is neither MD, whole-time director, or manager of the company, whether provisions of Section 197 of Companies Act and Schedule 5 is applicable to him for calculation of limit of remuneration.
If he is a director, then yes, the percentage will be applicable. If he is not a director, then it will not be applicable.
Yes, he is CEO and also a director.
So
then I think
so director limit will be applicable. Yes.
27 number question is, in case there is no manager in the company and decision maker is CEO or CFO, can CEO and CFO be deemed to be manager and their remuneration is to be covered under Section 197?
No.
I think we have to designate it.
No deeming.
Yes,
because
yes.
CFO and CEO are being defined as the person who have been designated like that. Manager has to be appointed as a manager of the company, having whole or most of the powers of the board. So I don't think that CEO and CFO will be deemed to be a manager. I don't think so.
Yes, sir. Sir, whether unlisted public company can pay remuneration or bonus to whole-time directors before taking approval from shareholders, but after taking approval from NRC and board?
Yes, they can. Subject to approval in the next general meeting.
Yes. Is Section 196 and Schedule 5 applicable for deemed public company if we have MOA stating that we are private company, but by purview of parent company being public limited company, we become deemed public company? This condition is mentioned in the article. No, I don't think so.
First thing is, you cannot mention such things in the articles. Either you are a public limited company or you are a private limited company for the purpose of applicability of the provisions. So whatever you write in the articles, that is irrelevant, because articles, you can continue those three restrictions of private limited company in respect of deemed public. So I don't think that such article is possible. And the provisions of 196, 197 Schedule 5 is applicable to deemed public company.
So the next question is public limited closely held company between two groups. In the EGM agenda for revision of remuneration of MD, a special resolution is sought. 51% shareholders are related to MD. How to pass SR?
No, see, it depends on the, so special resolution has to be calculated on the basis of number of votes cast. So these 51% will be out of the purview. Out of 49%, you should have 75% plus.
Yes, you need not to see the whole value of the company.
No, not required, not required.
Yes.
Related parties will be kept out of the calculations.
Yes, it will be decided from the total vote casted.
Yes.
So the next one is whether we can take mediclaim policy for non-executive directors of a private limited company and pay premium for the same. I think there is no restriction. Yes.
No problem at all.
When we can identify the inadequacy, either at the time of commencing the payment or at the end of the year.
End of the year. As I said, it has to be for this year, not for previous year. So at the end of the year, you will understand whether you are inadequate or adequate.
Okay, sir. Sir, what about the remuneration of directors of the subsidiary company of a listed company, which is not a material subsidiary? Do we need to obtain the approval of shareholders of subsidiary company?
Shareholders of subsidiary company, yes, you will be required to take approval of subsidiary company. Only thing is, if that director is also a director on the listed company, then he will be a related party of listed company, and a transaction between a subsidiary and a related party will have to be again approved by the audit committee and board, and if required by the shareholders approval. So as per the latest amendment in LODR, you will have to take the approval of related party transaction of subsidiary with your related party transaction.
Yes, sir. One more question I have received. Can you please confirm if CEO and CFO can be of foreign nationals in private limited company?
Absolutely, yes.
Okay, sir.
Yeah. Should we go ahead?
Just a second. Yes, you can go ahead, sir. If you want to say something, we can take some more question at the end if you have.
Yeah. Yes. Okay. So because I had kept half an hour for the KMP, but I think this managerial remuneration is taking some time. So next slide, please. Yeah. So as per section 197, there is a requirement of having certain disclosures. There is a very, very pertinent question which I always get. So you must be aware that median of the total remuneration, if a person is getting more than the managing director, if employee is having more than is paid more than the managing director, or if what is the percentage of security held by them, then top 10 employees on the basis of remuneration paid and the details of the same. Even though the mother section 197 talks about listed company, but rule 5 sub rule 2, which clearly talk about a company. So I think we'll have to follow a company. And even in case of public limited company, you will have to give the details of top 10 employees of your company on the basis of your remuneration. And while giving that information, you will have to give so many details. There is one proviso below that particular provision of 5 sub rule 2, that if there are foreign employees, then the details of the foreign employees need not be mentioned in the listed companies or that company's annual report, and that can be obtained by the shareholders by writing it to the company. But this is only in respect of foreign employees and not in respect of Indian employees. So many companies are taking shelter of this particular proviso, but that proviso is not applicable for Indian employees. So you'll have to give every company which is covered, public limited company will have to give details of top 10 employees of their company. So there is no exemption which is available here. So and one more thing, while calculating the median So how median has to be calculated is also very well mentioned in the rules, that you will have to arrange the remuneration paid from higher to lower. So you'll have to arrange it accordingly. And median of the number. So if there are 100 employees, the 50th employee, the salary of 50th employee will be your median and not the arithmetic average. So median is not the arithmetic median, it is the remuneration paid to the median employee. So 50th employee will have to find out, and his remuneration will be treated as median salary paid by the company. So this is very, very important. If commission is being paid by the company, then the other so for example, if remuneration is paid by a subsidiary or a holding company, and that person is also getting the commission from holding or subsidiary company, then it is possible the commission can be paid by the company even if he is getting remuneration or commission from holding or subsidiary. So that's not a problem. There is no restriction. It is an enabling provision. It can be commission can be paid to that particular director even if remuneration is paid by other company. Insurance premium is not part of remuneration if it is for indemnifying the frauds or negligence of the company. The premium paid by the company, because we have seen that whatever has been passed on or given indirectly also. So if company pays the insurance premium, a normal insurance premium like Mediclaim, somebody asked. So if that is being paid by the company, it will form part of remuneration. But if that premium is for the insurance taken for officers' indemnity policy, then that particular premium will not form part of remuneration. So this is a specific mention in section 197. Then last but not the least, the auditor should give a declaration that the remuneration paid is within the limits of the provisions of section 197 or schedule 5 as the case may be. So every year auditor will have to give a declaration in its audit report. So these are the detailed provisions of 196 and 197. We have almost covered most of the points of schedule 5. I'll just run through it quickly if whatever has not been covered. So next slide, please. Yeah, so one more typical question which has been circulated in many of the social media is, what is the resident director as per schedule 5 part 1? So there are two parts. Part 1 talks about the appointment of managerial personnel, and part 2 then talks about remuneration. So part 2 talks about a resident Indian. So managing director, if he is getting appointed, he should be a resident Indian. Normally we understand that resident Indian, even for the purpose of Companies Act, the resident director, which is the requirement of the act, has to be in India for 182 days. But here the explanation to schedule 5, that particular proviso specifically states that resident Indian means he has to be continuously in India for a period of 12 months. So even if he goes abroad for a day or two, that continuous period of 12 months will be lost. So I think this is very, very important. I think this is not a very practical provision, but this is law. The law says that he has to be in India for a continuous period of 12 months before the appointment. Then only he can be appointed and he can be treated as a resident Indian. Next one is limit for managerial person, that is MD, manager or whole-time director, and there are limits for other directors. So let me tell you that this MD, manager and WTD limits are for per person limit, and it is on pro rata basis. So it is for one managing director. If you have two managing directors, this will automatically get doubled. If you have whole-time director and managing director, it will get doubled. So it is to be per person, calculated on per person basis. And for other directors also, it is per person. And the hitch, again, I'm reiterating that hitch here is other directors. In explanation, it has been mentioned that other director means non-executive director or independent director. So executive directors will never come in schedule 5. So this is a very, very important point. We need to understand that how to manage that and how to go ahead about it. Then special resolution. So whatever rules are applicable for one time, so appointment, at the time of appointment, same rules will be applicable for increase. If increase is going beyond the limit, permissible limit, you will have to take a special resolution. Professional capacity, then we have already discussed. If he is in the professional capacity, then special resolution has to be passed. NRC approval is mandatory, board approval is mandatory. Special resolution in case of a normal director, ordinary resolution in case of professional capacity. And this remuneration can be paid only for the period of 3 years, Schedule 5 payment. After 3 years, he will not be allowed to take that remuneration. Then at that point of time, we can have a further approval of the shareholders by way of special resolution and increase it and take benefit of Schedule 5. And for all these purposes, the company should be without any default for debenture holders or deposit holders. Next one, I think we'll just scroll it around. Next slide, please. So all these limits are not applicable if your company is newly incorporated for a maximum of 7 years. So for first 7 years, all these Schedule 5 restrictions are not applicable. So amount paid to a director of a newly incorporated company, Schedule 5 will not come into picture. You don't need to follow all the procedure under Schedule 5. You can make the payment of remuneration as you wish. If the remuneration is fixed by BIFR or NCLT, if you are into reconstruction like rehabilitation scheme and BIFR has passed an order for making the payment of remuneration to managing director, it will be out of the purview of Schedule 5. You can go ahead and make the payment. If NCLT has decided in IBC cases or any other cases, then also it will be out of the purview of this Schedule 5. Next slide, please. So as I said, the role of NRC is completely different, not only in respect of fixing of remuneration, it will fix the parameters by which it should be decided that what should be the salary or the remuneration. So there will be a remuneration policy. What should be the qualification of director? They can mention that. What are the securities which are held by the director will be understood and considered by that. Industrial standards, board evaluation, their performance, everything will be considered by NRC, and then they will recommend the increase in remuneration or fixing of the remuneration, and then it will go ahead to the board, and board will then recommend it to the shareholders. So that process is very, very clear. In respect of expatriate, like a foreign national who is a managing director here in India, few of the perquisites are not considered as part of remuneration, can be travel to the home country, travel allowance to the home country, children education, 2-3 allowances, just like what we have seen that PF gratuity and superannuation perquisites are not considered as part of remuneration. For expatriate, there are 3 more perquisites which are not considered as part of remuneration. MD in 2 companies, then total remuneration which he is getting from both the companies should not exceed the highest permissible for one company. So there is always one tricky question. There is one private limited company in which a director is a managing director and a listed company. So listed company has got a limit of say 5 crores, and private limited companies anyways doesn't have a limit. So I think he can get the remuneration paid from both the companies without any limit, because the highest limit is unlimited because it is a private limited company. A loophole, but need to be understood in respect of corporate governance also, but a tricky one. Yeah. Next, I think is these are the basic definitions and provisions. We can just skip them. You can skip 3 slides. This particular.
Meanwhile, we can take some questions, sir. If you
yes. So
okay. Yes.
Just one slide and then we will take the questions. Just okay, one slide quickly. Next slide. In respect of LODR, so as I mentioned, approval of annual approval of shareholders is required if one non-executive director is getting paid more than 50% of the remuneration of the total non-executive directors. Then annual approval of shareholders is mandatory. For executive director, the limit is 2.5 or 5 crores, whichever is more, and special resolution is required to be passed for this particular crossing this limit. So understand that you will have to find out for listed company, find out 3 limits. One is as per 197. If it is inadequate, then Schedule 5, and also the listed LODR restriction, that is 2.5 and 5 crores. Out of these three, the lowest you can pay. So that has to be very, very clear. Lowest means lowest between the Schedule 5 and LODR. So strictest of the two you will have to follow. You will have to adhere to all the three provisions of that. So if more than one, then 5% of the net profit. Again, special resolution is required to be paid for that. Has to be passed for that. And additional disclosures are required in case of listed companies. That is the details of all components of salary, that is remuneration, what is fixed, what is variable, how many ESOPs, what is the notice period, and all those things have to be given in the annual report or corporate governance report, as the case may be. So this is all about managerial remuneration. Whatever I know, I have shared with you. If you have any questions, then we will go to the KMP slide.
Yes, sir. So, sir, can we take questions now?
Yes.
Sir, the question is, when ESOP are given to non-executive directors and later after exercise are converted to equity shares, and those amount can be shown as remuneration, and whether need to for SR in general meeting?
Yes, I think the ESOP, whenever they are so whatever benefit you have transferred by way of ESOP will be treated as is remuneration. So, and it has to be treated as part of the remuneration. And if it is going beyond, then the special resolution will be required.
Okay, sir. Just a second, sir. So, next question is whether salary paid to KMP and directors in the capacity as director requires approval of audit committee under section 177?
Yes.
You have already covered, I think. The listed company has taken approval of shareholders by way of special resolution for payment of remuneration to one of the executive directors of the company for a period of 3 years. Now company is in 3rd year, for which approval has already been obtained. Now for payment of remuneration to the ED in the 4th year, whether the company should seek approval of shareholders in 3rd year itself, or can seek approval in the mid of the 4th year?
They can do a post facto also. That's not a problem.
Okay. I have a query with respect to payment of non-executive directors. He is on the rolls of Indian company, but getting his salary from foreign company. On the payrolls of foreign company, Indian company is paying the amount of foreign company, and foreign company is paying remuneration to him. Will he be deemed to be executive director or not?
No, he will not be. And basically, if the payment is made by the foreign company, and if he is not getting anything in this company, then
yes,
the limits are not applicable to him.
Indian company, I think, is reimbursing his payment. I don't know in which capacity they are sending the money outside India.
Very
they are yes, the foreign company is raising some professional bill or what they are doing. So question is not clear, I think, here.
No, if it is a reimbursement, yeah, let me clarify that. If there is a reimbursement of that amount by Indian company to foreign company, it will be booked as a manual remuneration of this director in Indian company. At that time,
but sir, it is not clear here. In the question, it is not clear. Because they are saying the director is on the rolls of foreign company.
Correct.
So if he is on the rolls of that company, I think he should not be treated here as an executive director. So next point is whether chairman who is non-executive of a company can act only on advisory role and take professional fees for such advisory services and no remuneration.
Yes, it is possible. No problem.
Okay. The next one is if appointment of MD is a term of 5 years, then if the age of director is between the term of years crosses above 75 years, should we pass SR for the continuation of his term?
Yes, because the provision says that if you want to appoint or continue a managing director over and above the 75 years, you will have to take a special resolution. So for continuation also, you will have to take approval. So what best option is the last term in which his age is going beyond 75. In that you pass a special resolution mentioning the subsection covering 75 years.
Okay, sir. Sir, one more question. Can MD, who is also the member of company holding 30% shareholding, participate in the resolution for his own managerial salary placed before the members?
No, he cannot.
Okay, sir. So, sir, these are the questions we have received. If you want to add some concluding remarks on the topic.
No, that's it. So whatever I had, I have just shared, and whatever questions you have, whatever you have asked so far is fine. Whatever you get to know later also, I think Suresh, he is available, and I think this entire presentation will be on the YouTube also, so you can access it later on also, and also on the knowledge sharing. I think the new initiative which the council has taken. So there also all these presentations would be there. So members should take benefit of all these question answers and the presentation, so that we all comply in the same spirit and same logic.
Yes. So, sir, with your permission, there is one more question, because I am receiving many questions over WhatsApp also.
Yes.
So, as per rule 2, subsection 1, clause K of the company's is specification of definition detail rules 2014, executive directors means a whole-time director as defined in clause 94 of section 2 of the Act. Since the executive director is defined under Companies Act as a whole-time director, the term executive director must be used as whole-time director for the remuneration provision as well.
Yeah, there is one interpretation issue in this particular rule, because it says that for the purpose of these rules, executive director, and the definition has not been mentioned in the interpretation clause. So I think there is still a difference between a whole-time director and the executive director, as far as my understanding goes.
Okay, sir. Thank you very much, sir. So, sir, it was a wonderful discussion, I would say. And here I want to give one disclaimer or declaration also, that all the views of Devendra Deshpande ji and my views are our personal views, and these views are not the views of ICSI. So please don't use the views of speaker as views of ICSI. So thank you very much, Devendra sir. It was really a marathon webinar, I would say, on the topic. And it was a really wonderful webinar, sir. And I would like to say thanks to you on behalf of ICSI and on behalf of all the participants. I think more than 15,000 members have attended this webinar, and they are attending this webinar till now. So you want to say something, sir, I think?
Yeah, I think the KMP related small is pending. I think we should we discuss that, or we will close it?
You can take it, sir. This is the beauty of a dedicated speaker. So
yeah,
please.
So without going into the presentation, let me clarify one thing which I wanted to tell about the KMP. So key managerial personnel, there are two things. We'll have to be very careful in understanding key managerial personnel, because section 2 subsection 51 defines key managerial personnel, which says that managing director, CEO or manager, point number 1, company secretary, whole-time director, CFO or such other officer as may be designated will be the KMP, and it is a exhaustive definition, not an inclusive definition. So all these people will be KMP, irrespective of whether the company is private, whether the company is public, or whether the company is listed. So if in a company, a private limited company, the capital is, say, for example, 50 lakhs, a company secretary, if he is appointed by the board by passing a resolution in the board as per section 179 subsection 3, then he will be company secretary of the company. By virtue of the definition of KMP, he will be KMP. And by virtue of definition of officer in default, he will be officer in default. So you don't mix up 203 with provision of KMP. 203 specifically states about whole-time key managerial personnel, which is different from a key managerial personnel. Officer in default is key managerial personnel and not whole-time key managerial personnel. In 203, there are 3 requirements. All 3 requirements has to be different persons. So there has to be 3 different people. 203 never defines or states that these KMPs should be appointed. If you look at the words used in 203, it says shall have. Shall have means it can be employed in one company, but acting as a whole-time KMP in another company. It is possible. So you need not be employed full-time in that particular company. So I think this is very, very important. All KMPs, so managing director, manager, CEO, and whole-time director, they should be designated as KMP, then only they will become KMP. But CFO and company secretary, they will automatically become KMP if they are appointed by board resolution. So these are the few things which I wanted to tell you. Plus, one KMP can act in 2 companies. Only thing is, both the companies should be holding and subsidiary. One KMP cannot act in more than 2 subsidiaries. So more than 1 subsidiary. So if there is holding company H, subsidiary company S, then he can act in both. But if there is holding company S1 and S2, he can act in H or S1, SH and S1 or H and S2. He cannot act in S1 and S2. I think I'm clear about it. So he can be only in 2 companies, not more than 2 companies. Whenever he is getting appointed in subsidiary, he should check whether earlier he is a KMP in a holding company. So this is as per section 203. So these are the few things. Vacancy has to be filled in 6 months. Now, as per LODR, it is to our benefit that the vacancy has to be filled within 3 months. So it is our benefit. For all company secretary, it is beneficial. And that is it. So these things I just wanted to inform about KMP. Just before we conclude the session, I wanted to, because these are the 2 topics given to me. I have answered few during the question answer session, but I wanted to inform these important points of KMP.
Thank you, sir. And it was very much important for all the company secretaries and specifically for the budding company secretaries and young professionals. So thank you very much, sir. Once again, I would like to express my gratitude of thanks to you on behalf of ICSI, on behalf of all the participants. And thank you for sparing your valuable time with us. And it was a really wonderful and knowledgeable session, sir. And thanks a lot to all the participants for attending this webinar. Thanks a lot our technical team and our secretariat also, who have arranged everything without any flaw. So thank you very much all the participants. Mr. Deshpande and Mr. Pandey now taking your lead. So thanks a lot. Thanks a lot. Thank you very much for joining.
Thank you, Suresh. Bye-bye. Thanks all.